Hey, what's up, everyone? Hope you're all doing well. So, in this video, I wanted to talk about my trading capital and risk management plan going forward on this channel. As you can see, I want to talk about my total portfolio and how much I'm trading with, and where is that money coming from, and my risk management rules, how I am deciding my position size for any given trade, and what are the non-negotiable rules. And I'm gonna give you a snapshot of my portfolio for trading where I'm tracking all the trades, and then finally give you the reason as to why I'm trading again. All right, let's go with the step one. Right now, my investment portfolio is around 2.5 crores. So this includes my stocks, which are my long-term investments. Now, before deciding how much to trade with, I asked myself how much of my total wealth, total portfolio, am I comfortable putting into trading, an activity that involves real risk and, more importantly, very high stress. So when I did some research, for most professionals, anywhere between 10% to 20% of their total portfolio is a reasonable upper limit for active trading capital. That means if I wanted to use 20% of my 2.5 crore portfolio, I could go up to 50 lakhs. But now I'm starting with 30 lakhs, which is around 12% of my portfolio. Step 2. So where is this 30 lakhs coming from? I have pledged, and pledging means you temporarily give your shares as security to your broker so you can borrow some money to trade, and you still own those shares. In this case, I have pledged liquid funds, which are very low risk debt funds, and they give me around 6 to 7% per year. I have pledged those liquid funds in Zerodha, and I have received margin against them. That margin money, which is like 30 lakhs, is what I'm using for trading. So let me show you. As you can see, this is what the liquid funds which I pledged and got the money for trading, approximately 30 lakhs, and there is some cash available, so around 31 lakhs. My risk management rules. This is the most important part that I do not want to violate. Number one, maximum risk per trade. That should be 1% of my trading capital. So with 30 lakhs capital, that should be 30,000 rupees per trade. This means even if a trade fails, I lose 30,000 rupees unless massive gap downs happen. This is my non-negotiable. Maximum portfolio risk, 2% at any given point of time. That means if I have two trade one open, both of them hit the stop loss, I lose 30,000 rupees times 2, which is 60,000 rupees maximum. So 60,000 is 2% of my 30 lakhs, and that would be my total exposure limit. I will try to not exceed that. This 2% could be, there could, there could be a black swan event where the market opens gap down, and I could be hitting like 20% drawdown on a single given day, which I am prepared for. So even in the worst case, if both of my trades hit stop loss, my total loss for the day or that moment will be 2% of my capital. It could go up to 20% as well with just two positions. That's the dangerous thing about trading. That's how I'm trying to make sure I can survive long enough to stay in the game. How I decide my position size. Position size is based on how much I am willing to lose. Here is the formula. Position size equals risk amount divided by entry price minus stop loss price. For example, as in this case, my trading capital is 30 lakhs and I'm willing to risk 1%, which is 30,000 rupees. If I enter a trade at 1000 rupees and put a stop loss at 950, the difference is 50 rupees. So I would be losing 50 rupees if the trade hits the stop loss on one share. So how many shares can I buy so that I lose 30,000 rupees? That would be 30,000 divided by 50. So I can buy up to 600 shares to not lose more than 30,000 rupees. That means if I take 600 units and the price hits stop loss, I lose 30,000, which is 1% of my capital. If I buy more than that, I am over risking on that trade. My non-negotiable golden rules are my fixed commandments for trading. I will try to not break them. no matter what happens in the market. Risk per trade less than 1. Total portfolio risk less than or equal to 2%. Always protect capital first. So let's go through the portfolio snapshot. I think we are just close, very close to hit our DMART. Yeah, DMART is trading at 4202 and our stop loss is at 41.99. It might just hit. Wow. At the time of recording, DMART October future. Let's add it. Guys, we already hit one stop loss. I traded HCL Technologies and we might hit the second one here. Almost close. And where is our stop loss? 41.99. And we are already losing something like 8,800 rupees on this one. All right, let's go to the GTT. We're very close. Let's see if it's gonna hit. Oh, it's, yeah, it's, I don't know, 4,200. 4,200. 4,200.9. 4,200. Almost close. I think it hit. It touched. Yep. It should hit, but why did it not go through? Yep. Sell complete. And we hit the second stop loss. Why couldn't the life be easier? You know, why couldn't be the other way around? Like we hit two targets first up. Welcome to trading, Santosh. All right, let's go to the holdings positions. Let's track this. We hit the stop loss of how much? 9,300 exactly. And charges, I don't know, maybe 200. Yeah. So this, we could, after charges, we could be losing up to 9,500 on this one. So there is another losing trade. Now we have an open position in Axis Bank. Let's see what happens with that. All right, let's go back to tracking trades. Okay, this date is when, if we enter the trade today, for example, I entered Axis Bank trade today, which is 24th October 2025. So I need to simply write it down, the date. And today I entered Axis Bank, so I wrote Axis Bank as symbol. I bought it at 1256.6, and if it goes to 1213, I'm gonna sell that, which means a risk per trade would be approximately 40 rupees. And then I bought the lot size, I bought the future, which means the lot size is 625, which means 625 shares. Okay, and the risk on this trade is around 27,000 rupees. So if I lose this one, if the stop loss hits, I am going to lose 27,000 rupees. I only put one target, that is, if the stock goes to 1342, I'm gonna sell that, which is 2 times the, we are losing 40 rupees if we lose. If we win, we want to win double that money, which means 1342. So exit 1 P by L. Yeah, if we win, we will win 53,000 rupees on this one. Let's hope that we win this one. If not, it is what it is. Trading. All right. So I already traded DMART and HCL Technologies. Both of them, we lost money on both of them. What I did was buy DMART on 15th October. I entered at 4260. I thought if it goes to 4200 or below, I will sell it. And that is what just happened. So we lost 9,300 rupees. I bought a total of 150 shares of this one. I lost 9,300 rupees on this trade. The strategy which I used was RSI divergence, which I will be explaining in the other video. For now, I want to explain just the trades and how I am tracking those trades. On 20th October, I bought HCL Technologies at 1,513 rupees. I thought if it goes to 1495, I will sell. The quantity I bought was 700. So the risk on that trade was around 13,000 rupees and I lost that again. So now let's actually do the graph. Total P by L. This one plus This one should be our, so far we are losing 23,000 rupees. So we started at minus 95 and the curve is going down. That's okay. It's just true trades. So this is how I am tracking every single trade. Let's track each and every trade as we go forward. And the strategy which I want to use going forward is 52-week breakout strategy. I don't want to use RSI divergence or breakout anticipation. Let's keep it simple. Implement only one strategy, which is 52-week breakout strategy. What that means is, if a stock price closes above the 52-week high, which means 1 year's, then the next day we are going to, take that trade and put some stop loss and target. Stop loss is 1%, target is 2%. That's it. We will follow one simple formula, this one, and stick to this going forward until at least 100 trades. I just want to do this, and I will track that all the trades here, and I will also put this link in the description so that whatever I'm doing, I'll try to do it transparent. I'll try to show it to you, and I also need suggestions. If you are already a very profitable trader or have lot of experience, you can always suggest me. I would always appreciate that. This is one retail trader, trying to see if he can be a profitable trader if he tries to stick to one strategy for a good period of time. Let's see how it goes. For now, we hit 2 stop losses, and the good thing about both of them is our risk is clearly below 1%. That is the best thing. So as long as we keep that risk in, limit, we have the chance to fight